You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. That tune can mean only one thing. It is time to rock out with the Option Block. My name is Mark Longo, coming at you live here on this show, at least every Monday and Thursday, noon Central, 1 p.m. Eastern. We have a whole bunch of other shows that are popping off throughout the week, including, I do believe, the return of Options Bootcamp tomorrow. So stay tuned for that. I know that's a popular one. Hasn't been live in a while. Hasn't been up on the old feed. We've been doing other things, but I think we're bringing that one back into rotation here. So look forward to that, and of course, listen to it wherever you listen to this fine program on wherever device of choice. We don't judge. Just get in those questions, those comments. We do. Yes, indeed, we do. I can't speak for all these guys, but I like to hear from you guys. And joining me on the old program today, let's see. Let's go out to the hot seat. Well, once again, we are joined by the Song of Ice and Fire, Mr. Colin Songer, holding down the Fidelity hot seat today, the active trader strategy desk. Mr. Colin, you must be excited that your titular Game of Thrones just kind of swept the Emmys last night, sir. Were you on the edge of your seat the entire night?
Absolutely.
Did you have a viewing party?
A little bit. Just coming back from my week off, so my staycation. So just excited to jump right back into it.
All right, then let's do it. And joining us to help us do just that, let's go out to the land of tasty, delicious gyros and lemonade, of course, St. Charles, where we are joined once again by Uncle Mike TOSAW from St. Charles Wealth Advisors. Uncle Mike, welcome back to the show. How are things in the land of the Weather Shield?
Going well. 68 degrees, sunny. What more could a man ask for?
What more, indeed. Let's see if they can match that in the hinterlands known as Maine, where we are joined once again by the Rock Lobster, doing a rare bit of triple duty. Thursday on the Option Block, Friday on Vol Views, back again for your listening pleasure on Monday here on the Option Block. Mr. Rock Lobster, welcome back. How are the crickets in Maine today, sir?
The crickets are quiet, and I don't know where they all went, actually. They're out there, but you know what? I tried hard, and I closed all my windows, but they're not blowing through the windows. The double pane, my office is like Fort Knox when the windows are closed, but that cricket noise came through.
They were serious. They were not messing around. Those Maine crickets, not playing around. You guys have giant lobsters and apparently giant crickets, too. Who knew?
Dog-eating crickets.
Yes, exactly. All right, with the team assembled, let's get to it. Dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Welcome to the trading block. It's been a weird couple of days in the market. Of course, if you're listening to Vol Views on Friday, kind of right at the start of the show is when all of a sudden it seemed like the worm was maybe turning a bit. From a market and from a volatility perspective, we saw what had been a rally turn into a bit of a sell-off. Not quite a rout, but a sell-off. We saw vol all of a sudden firming up and actually ticking up a couple of points there across the board. So it seemed like all of a sudden maybe for some reason at the end of the week, the market was starting to price in the risk that we thought maybe should have been there at the beginning of the week. And, of course, all of it was due to some lingering trade war tensions there. And now, of course, coming into today's session, the market kind of gently, amiably drifting up today. Most of the major indices up fractionally, half a percentage point. 0.05%, not a half a percentage point. That would be something. Or even the leading charge to the upside is the Dow with about 0.1% out there. Of course, gold and crude also getting a little bit of a lift today. We'll get into that in a little bit as well. And, of course, volatility still kind of struggling to find itself after ticking up pretty strong on Friday. Now we're back around that 15 handle. Remember, we were back in a 13 handle talking about maybe threatening a 12 handle towards the latter portion of last week. Then all that went away. As we're standing right now, we're up a little over a point from our last show. We were about a 13.85 last show. We're at about a 15 handle exactly in VIX cash out there. Our old friend VVIX, of course. When VIX is moving, VVIX is ticking up as well. It's up back in triple digits land, up a little bit north of 100. About 100.5, so that puts it up about 4 handles from last show. And unfortunately, our old friend, who I guess maybe depends, looking at the OI, I think I know how a lot of you were leaning, but VXX up a few points from last show as well, up about 1.25 points actually from last show, which if you listen to Vol Views, there was just so much wasted money on that OI. A little bit to the upside, mostly to the downside, going out last week in VXX as well. It's kind of like a broken record out there. That product just breaks hearts left and right. But let's go along. Let's start in the land of St. Charles, because Uncle Mike, these are kind of, I've said it before, but we're kind of in that mode again when we're shy of the 3,000 level, so maybe not so much there. But in just about everything else, gold's been moving. It's well north of the 1,500 level again. Silver, we talked about it for a while there, had that great run up. Then the last couple of weeks, we've been touching on TWIFO because it's been giving up some of those gains. So it's been kind of weird times in the metals as well. So all this translates into an Uncle Mike kind of market. What's going on in your neck of the woods these days, sir?
Silver is shining today, to say the least. No, it's exciting right now with silver. I think that a lot of for my more aggressive silver, some of it I just have hold the underlying of it. But with my more aggressive collar, we're good until the 24 level in SLV. So we still have a ways to go with it. I would probably want to see maybe at the 19 or 20 level, I might do a roll up with the put. But for right now, I think that it's exciting to watch, but this could be a head fake with it because it does do this at times to where it goes higher and then it gives you an April Fool's rally. And it's not even April. So we do get this at times. So I'm not too excited, but the fact that we are up over 3% on the day and the underlying is very exciting to say the least. But I think that I'd like to see it break the 19 mark next. That's the next level that I think we need to get through, which, yes, we were in the 18s a couple of weeks ago, but I think until we break 19, that's the next level of excitement, so to speak. We're still dangling around the 3,000 mark with where we are on silver, so we need to make sure, with the S&P, so this appears to be another magnet number like the 2000 number was a few years back. So just be careful with what you're doing. Don't try and buy too much premium. But on the flip side, when you are selling premium, make sure that you manage risk accordingly. So, but for the time being, silver up, S&P still magneted, it seems, at around the 3,000 level.
I like that. Magneted. We're making up our own term. I like it. So what? We can do that. We've been running for a while. We have the freedom, the carte blanche, to make up our own terms out there. But yeah, it has been interesting in silver. I'm looking at a recent 1-month chart of SLV. Of course, we track it over there on TWIFO on the futures side as well. And it's been kind of beginning of the month, March up to about 1830 or so, then pretty much turning right back down. Looks like the chart of a biotech here in the near term, shooting up and then shooting back down again. All sorts of madness going on in silver. So silver has been on our radar. It's been in our list of the top 5 movers and shakers of late, a lot on TWIFO as well, mostly to the downside lately, but maybe if this week's trend keeps up, maybe back on the upside. Either way, silver all of a sudden somewhere interesting to watch. Who'd have thunk it? Mr. Uncle Mike, is this interesting enough to actually do anything in the collars, though? That's the big question.
No, not yet. Like right now, I'm still at the 1224 level on my collars. So for the time being, I'm holding tight. And I think if we go up another couple dollars, I'll likely roll up a put, but I'm going to hold off on that until we actually see it.
That's the story of those collars, holding off. That's pretty much it for 2 years. But, exciting nonetheless. The epic story that is. Someday someone will write a book, maybe a screenplay, on the epic story that is Uncle Mike's 2-year silver collars. Meanwhile, we got to keep on moving on to the land of the Song of Ice and Fire, a.k.a. the land that swept the Emmys, despite the fact that final season maybe not getting people as excited as they hoped. Doesn't matter. Piling up the awards. So, hey, the Emmy folks liked it, apparently, at the very least. Mr. Colin, I won't say any more because I know that'll get you offended. But what's going on? What's going on in the world of Fidelity, sir?
Yeah, so, Fidelity customers, when I took a look this morning, earlier today, top in the list was actually Roku. 48% were buy orders compared to 52% sells. It's a little bit more selling pressure, but pretty even nonetheless. And all based on kind of a headline around them coming out in conjunction with some sophisticated measuring tools for marketers for their TVs. So right now it's trading out 108.43. It's up about 38 cents, which is about 0.3%. Right now it's below its 20 and 50-day moving average. It's pushing outside of those Bollinger Bands as well, but it's still maintaining above that 200-day moving average, and the 20-day is still above that 50. So, there's concerns there, but, certainly, it's the interesting thing that I thought when I took a look at this is down over 30% since its high on September 9th. And when I saw out of the option order flow, we're seeing almost a mirror image where we're seeing one call to 1.25 put traded for volume so far today. When you compare the 90-day average, it's just the opposite, 1.25 call to 1 put. So I thought that was interesting. Next on the list was just a whole slew of regulars on there. First of them being Amazon. So Amazon making that number 2. A lot of there was more buy orders out there. With 60% of the orders by Fidelity customers were buys, 37% were sells, and it's currently trading $17.87. Right now, it's down about $6.44, which is down 0.3%. So interesting enough is that it's sitting on that 200-day moving average. It is below its 20-day and below its 50, and that 20-day moving average is below its 50-day moving average, and that 20-day is just squeezing that price against that 200-day. So it'll be interesting to see how that's going to play out. It's really in line, that volume call-to-put ratio is in line with its 90-day average. Just a little bit weaker, but it's basically in line. Next one, another regular name, Netflix. That has made the list. 47% buys, 53% sells. So pretty even there. Its last trade is $263.18. It's down $7.57, which is 2.8% down. Netflix is just it's below all its moving averages. The 50 is above the 20, which is below the 200-day moving average, and price is below all of them. And price also broke out the bottom of that Bollinger Band. So, those are some of the things I was looking at, which it hasn't quite reached its year low of 231.23, which was created on December 26th. But so far, it's been kind of moving in that direction. It'll be interesting to see how that plays out. The volume call to put ratio is 1 call to every 1.25 put traded. Well, it's kind of a mirror image. 90-day average being at basically 1.2 call to every 1 put. So a little bit more put activity than call, which is outside of its average. Now, the other normal is Aapl. So Aapl has made the list, which it's basically even with buy orders and sell orders for Fidelity customers. This is really on the backs of looking to make, the new Mac Pro PCs in the United States after they can get some tariff exemptions, so they can lower that cost of imported components. It's right now trading $218.99, which is up $1.27, which is just up about over 0.5%. Right now, Apple's trading above all its moving averages. 20 is above the 50, 50 is above the 200. It is off of its high, which it recently, interesting enough, it created a kind of a minor high back on, looks like it was September 12th, where it hit a high of 226.42, and just kind of has pulled back from that level. So it'll be interesting to see if it can make its way back up there. So when I look at the call to put ratio, a lot of it's right now 1.8 calls to every 1 put, where the 90-day average is 1.22 called to every 1 put. So a little bit more activity on the call side. And the last one making the entry, since we were talking about volatility, is Tvix. Tvix had 46% were buy orders by customers, 54% were sell orders. That was sitting at 12.8, which is down 30 cents, or down roughly about 2 3/10%. And this is a 2 times short-term VIX futures ETF product. So it closed to its 52-week low, which was created just 2 days ago. So it's really close to that, which was on September 19th that I made that low. And once again, it's below all its moving averages. So that's really what the Fidelity customers are trading today.
Thank you for that, sir. Good old Tvix. It kind of pops up every now and then, which is kind of interesting on the old Fidelity Most Active. I think it was the last Emperor who had a strategy block about that a month or two ago, just about all the nuances therein and why you maybe want to think twice before you pulling that trigger on Tvix. We, of course, have discussed it at length on volatility views over the years. It's had problems for years. And so, of course, post-VIX-ocalypse of 2018, it's one of the last of the Mohegans out there. So I get why people use it, even though it's not my favorite. But still, definitely caveat emptor with that one. If you haven't done so, check out, I believe it was the last Emperor's strategy block, all about the issues, the myriad issues. They are legion with that product. And speaking of issues with Tvix, he's got a few. Mr. Rock Lobster, what's up in your neck of the woods, sir?
Well, we're looking at. So here's my spidey sense, right? Whatever the value of the spidey sense is. So why? So we got the Fed thing we wanted. The trade thing's not as bad. VIX is still 15, but now like Treasuries are rallying again, gold is rallying again, silver's rallying again. So people are kind of just looking for that safe asset again, Fidelity, because again, like retail's looking at Tvix, like, okay, this looks pretty, because that product in general, like we discussed, it can be problematic. The last time I can't remember, but I thought it was trading over net asset value last week when we went into Friday's show. But so you've got this, and we have a 15 VIX. I think in realized vol and SPX is like 7% over the last 10 days. We are within a day or two of what I call vol fatigue, where the 30-day volatility is bid up substantially, but the short end of the volatility, like the SPX weeklies, a week or 2 week options, which are not in the VIX calculation, are much cheaper. So you have a funky dynamic there. I think time spreads and butterflies. And when I think of a fly in this case, it's not a theta-producing butterfly. It's more like using a fly to buy a cheap leg or something like that. So there's interesting opportunities on the front end of the curve that are different from how the market is pricing the 30-day part of the volatility curve. So the only thing I get from that signal is I think there's a fair amount of worry in the future. A couple of things on the horizon. The EU, it's slowing down more than normal. Basically, I think the trade war has hurt German exports, which is a problem since they're kind of the big driver in the EU, and the trade war has, it's caused disruption, and that's hurting Germany, which hurts the EU. Two, there's more and more rumors about antitrust breakup or some sort of regulation of big tech, probably Google, probably Facebook, probably Apple. Microsoft really isn't much of a social media company. I mean, they have Skype, which is just kind of a chat service, and LinkedIn. But they don't seem to be as they're not under the gun. Plus, they already had their antitrust stuff in the late 90s when Bill Gates was there as the king of the universe pretty much. And I think this is going to – I don't say it's a lock, but Congress likes to remind really large billionaires that they're still operating in the United States. And unless you come up with a way that you kind of go down and kiss the ring in Congress, they're going to throw something at them. Like they basically made Microsoft's life difficult for a decade. Didn't mean that the company was not big, but as far as the stock growth, I mean, if you recall, Microsoft went nowhere from like 2001 to, I'm going to say up to like 2011. I think I remember the low being like,
yeah, it was pretty much a lost decade for that stock. Yeah.
Lost decade. And, if the antitrust people decide to come in and really get in the grill of Facebook, of Amazon, of Google for how they use consumer data in a way that, because this is still a country run by laws. I mean, we have big business, but when it comes down to it, the Congress can make life miserable for a business if they don't like it. Look at the the for-profit education industry. Those companies. Look at coal. You can kind of pick what's going on in healthcare right now. There's a lot of stuff going on. Once Congress gets in your grill, it's a very difficult thing to get out of. I know. When Zuckerberg was supposed to meet with some senators last week, and I don't know if it went off very well. The guy is not the most contrite guy there is. So they're looking for something. I'm not sure they like the fact that so much can be manipulated so easily. These are, I would call them, they are not frontline, make crushing things yet. I think though Facebook and Amazon are a little weaker today. But when the market leaders, basically Facebook, Google, maybe Aapl to some extent, and Amazon, big giant market cap companies that have driven, the Qs up and the S&P 500 up quite a bit. And if once the antitrust guys step in, that puts a really the big growth that everybody's looking for kind of stops, at least for a while, because the companies are then focused on trying to fix all this other crap from a regulatory point of view. And I'm not even, I'm not making any political judgments rightly or wrongly on what's going on. It's just it becomes a distraction for whatever the company mission is. So I don't know where it's going to go. All I know is VIX is 15. It shouldn't be. It should be lower. It's not. There's still decent vol product premium, although not as high as it was last week because, surprise, VIX cash started to lift because that's what the liquidity providers and the future people that were buying futures were saying. They just didn't think it was going to stay in the 13s. Even though the underlying movement, I mean, a lot of volatility is math, and right now the short-term math is not meshing with the 30-day expectation. So usually when there's that kind of a disconnect, I expect something to happen. I just don't know what. So there's, I think, a lot of opportunity. And another thing TOSAW said about 3,000 is that for now, until there's a real big change in news, I mean, we've been here for about a year, like stuck. We've gone down a bunch sometimes, but this is the level that we can't get past. And I don't think we get past it until the trade deal is done. There's too many variables with that. So, you know, how far above 3,000 we get, I don't know, not too much farther. But I don't see the big rally until that happens. And I think that's where we are. I think it's difficult short-term trading for the most part, to be honest, except if you just want to be long gold or silver or something.
You know, you can always count on Rock Lobster for that ray of sunshine, right? It just uplifts us all and keeps us going throughout the rest of our week. All right, let's see what else is lighting it up out there. Kind of an overall quiet day out there on the street. Not a lot of paper tearing into the major products out there. VIX a little bit shy of 114,000 contracts coming in to start the show there. ADV a little bit north of 500,000, so pretty light day. SPY doing decent paper, about half their ADV. They're at about 1.5 million. Their ADV right around 3 million. SPX pushing about 650. Their ADV is about 1.3 million. The Q's 300,000. Their actually ADV is 601, so they're about half of there as well. And the Russell, at least in the IWM lens, doing pretty light paper, about 144,000. ADV a little bit shy of 500,000 out there. In terms of the top 10, again, this kind of shows you, this is updated as of a few minutes ago, so these are current numbers. You know, when Tesla's in the top 10 with 84,000, it's kind of a quiet day. That's number 10. Tesla, number 9. Amazon, $107 on the tape. Number 8, Bank of America, 111,000, 60,000 on the call side. Number 7, Baba, $117 on the tape. Number 6, the aforementioned Microsoft, they of lost decade infamy, 120,000 there. Number 5, Facebook, $141. Number 4, Roku, as we were just talking about them, looks like Fidelity liking them, the rest of the market liking them today as well. They're hitting $162. Number 3, Aapl all the way down to number 3. A paltry, a meager, a mere 186,000. Tied, though, for number 2, really, because Netflix also at 186,000. Number 1 with a bullet this week, AMD taking back the top spot on the chart after kind of languishing there in the bottom half of the top 5 for a while, top 10, I should say, for a while. AMD, 387,000 contracts on the tape. Let's see where your biases are lurking today. It appears to be with our number 1 name, AMD. 87% of that flow coming on the call side. So 336,000 calls lighting up. So call fervor today in AMD. Speaking of call fervor, let's see what else you guys have a little bit of the old feels for, because it's time to get weird. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
You know, the Eye of Sauron is always watching, always spitting us out interesting names to keep an eye on. It's kind of fun. We kind of have them pop off right as we get into the odd blocks. Andrew and I kind of seeing these as you are. A little bit of a fun live read here on the show. Let's kick things off with Analog Devices, ticker symbol ADI. This one trading today, 114.25, off a little bit more than $1, or not quite 1%. This is the name that a year ago was trading, well shy of where it is right now, trading $95 even a year ago, and it's had a little bit of topsy-turviness ever since then. Sold off and then run down to about 77, then got back up over the course of the start of the year into the middle of the year to about 114 or so, then sold off again down to about 98, then rallied back up to 121 around late July. Yeah, it's like late July, early August of this year. Kind of hard to tell on this chart. And then it sold off again down to about 104. And right in the last month or so, it's been on the upswing again, going from about 104 back up to where it is right now, 114. So near-term upside, but it's kind of had a weird mixed bag over the course of the past year. Let's see what's lighting it up. This is also weird mixed paper here as well, because what first set off our Eye of Sauron here was a pretty large print on the Dees 125 calls, going up for $1.93, 12,842 times. This is opening on our friends over there on the MIAX, and we thought that was interesting enough to maybe get it on our radar. Then we thought we'd fire it up here and dig into it while we're talking about it. We found this going up with it. Actually, not with it. That's what made it interesting. These are Dees par puts going up 10,000 times for $1.91, a penny off the bid. And these are listed as spread, but there's no other leg we could find with it. The only thing that even makes sense are these Dees 125s. And then we started digging a little more and realized, okay, these are obviously, they went up late. So that's why they're not marked to spread, and that's why the execution is a little bit wonky, because it looks like they're selling these off the execution. They were 190 at 210. They went up for 193. But that doesn't make sense. That doesn't really jive with the puts. It looked like it had the feel of a bullish risk reversal, and that does appear to be what went up here. A bullish ratio risk reversal, obviously, with the call leg going up late. That's how they get you, listeners. That's how they mess with you. They make the analysis a little bit more challenging. They put those tickets in late, and I have no idea what's possibly going on. But it looks like it's a ratio bullish risk reversal going up here, 191. So 2 cents on the 1-to-1 part. Obviously, they bought more calls, so that pricing a little bit different. But they paid out a little bit for this one to get some bullish upside. So 100 to the downside, that is within the range. 52-week low got down to 76, so they could be feeling some pain there. On the upside, the 52-week high is about 125, so that's pretty much right where they drew their upside line. So interesting strikes here. Worth noting, there are earnings in this. Earnings are November 20th. So Mr. Rock Lobster, we're kicking it off. Looks like with a little bit of a funky, out-of-sequence ratio bullish risk reversal. I know whenever you're doing these kind of things, risk reversals or not, I know you don't mind selling the put leg. You kind of like to pick your poison, pick your time on the upside premium buying leg. You got to get your juice for free. What do you think about doing it here all at the same time and on a ratio to the upside?
I guess the short answer is somebody really they really want it. They really want to have it. As a trade, I mean, it doesn't look like a bad type of long delta, but I would prefer to see I prefer to see the calls sort of, or the puts to make some money. And normally if you buy a call, that's usually enough upside. It's like you kind of pick one, to me it's still you pick one or the other, but I guess they like the fact that it's zero at the beginning, but if you just wait for a leg, if the stock goes up, you still make money. And if the stock goes down, you'll have the second leg for better. So most of the trades, or how we talk about trading an option bid, is like saving capital and using your capital efficiently, and not wanting to put, especially for retail, not putting too much capital at risk to generate a certain return, even though if the dollar at the beginning looks really favorable. I can get the risk reversal. I can buy that upside for a dime. I mean, it works if you want to own the stock or can own the stock. But I think for the average retail person, that's they're not going to buy when they're assigned 10,000 of the Dees par puts. They're going to buy 1 million shares of stock. So can't say it doesn't mean it won't work. It's just not my favorite way to go at it, but it does look very risk reversally. And it is looking like they're picking a good spot, right? They're selling the 6, 7, 8 month bottom with the par put, and they want to break out to a new high. So I mean, I can see why guys that like momentum like this type of trade. They have a strong feeling in the upside, and they want to gas it a little bit, and they're more than happy to unwind it if they need to, and so it can work. I just think for the average person, you have to be very aware of what you're doing in that score.
Yeah, especially if people think of that put and, it's free. Obviously there's a huge margin cost to tying. So there's capital tied up in this trade as well. But yes, I agree with you. It's not the worst trade we've seen here, certainly. Not even in the last couple of weeks. So I might put this one in the to be watched category. Gave himself a little bit of time for that upside to kick in as well. So yeah, not the worst. You can maybe quibble with the ratio a bit, but overall, I like myself a good bullish risk reversal. We'll keep an eye on this one, see if it works out. Let's move on to some nearer term paper. We got Nike popping off here pretty soon. Nike popping off when are tomorrow. They are tomorrow after the bell. Today, though, they are trading up about $1 to about 87.66, a little over 1%. This is the name that's kind of had an interesting year. A year ago, they were close to unch. They were off a couple of bucks, 84.25 or so. Then they sold off pretty hard right around the market's nadir there of Christmas Eve, got down to 67.5. Actually, 66.5 is their 52-week low. Then they kind of turned it right around. By March, they were trading about 87 again, pretty much right where they are right now. And they've kind of been topsy-turvy ever since then, selling off to low 80s, getting back up to their 52-week high of about 90, selling off again in May down to 77, and back up to 90. It's kind of been back and forth pretty much ever since then. We're at the latter portion of that again. We're at the upside portion of that again, threatening that 90 level, about 87.70 right now. And we have earnings coming in tomorrow. Let's see what the paper is telling us here today. Looks like it's upside and an upside sweep, but maybe not the way you might think. Usually pre-earnings, people like to come in and just swing for the fences. This guy's looks like he might be swinging for the fences to the dark side, going up 8,447 times of the AAK 95s for 36 cents. So these were 37 at 38. They were pretty tight going out. So this guy found himself a 36-cent bid. Looks like he crushed it about 8,500 times. This is opening. Opening, I don't know. Opening, I get the guy who found a bid. He wants to take some premium off the table, but opening upside at a level that's above the 52-week high, so I can see why he's going from that perspective. Got earnings after the bell tomorrow. Our friends over there at Orats have crunched the numbers. Nike, they were, at the time of this report, they were about an 88, so right about where they are right now, about 30-odd cents away. And they were pricing in about 80 cents on that straddle. Past earnings moves, though, they've averaged about $3.95. So this is one I've remarked on before. It seems like a remarkably cheap straddle given their recent history. So one to maybe keep an eye on. Also maybe for this guy who's apparently looks like blasting out a bunch of premium to the upside. That's certainly one to keep an eye on, because if they outperform to the upside, those calls are going to look pretty ugly pretty quick. Mr. Rock Lobster, are you agreeing with this? This is some guy going up and crushing opening bid on these calls. And I know if that's the case, this one probably gives you some shivers down the back of your spine, right?
Well, this gives me shivers, but this is, I have lots of closet theories. You know that, right? Lots of closet theories.
Got a few.
So I figured, so Phil Knight, what has he got? Like $20 billion or something like that? Right? Like, it's hard to really figure out what pocket change is for that guy. But I figure, you know what? He sees something like maybe a Bauble for a sweetheart. The new Ferrari's coming out. He's got like what? Couple 100 million shares of Nike.
A Bauble for his sweetheart.
Right? He's like, you know what I'm going to do? I'm just going to whack out $300,000 worth of calls. You know, I sell stock every quarter anyway, not much, but, you know, if I don't get anything, I get the sweetheart of Bauble, and and it's all cool. Or I'll get the new Ferrari. Either way, one of the two. You know, he gets the Bauble for himself. But I just, to me, has all the smell of somebody owns some stock and they're selling the all-time high. Not quite sure about earnings, with all the trade this and trade that, and the Kaepernick imbroglio or whatever. So anyway, that's what it looks like to me. Just somebody looking for some easy money that owns stock.
A new classification of odd block trade, which is the Bauble for the CEO's sweetheart. That's a first.
Another show title. That
might actually have to work it in there. Honestly, you got some nuggets every now and then, sir. Once in a while, you get gold. Most of the time, it's fool's gold. But once in a while, you get a nugget.
All right.
In there.
Well, I hang out with Sebastian long enough, I start to become funny.
That's true. It does rub off on you. At least you haven't picked up all the inappropriate humor. So that's good for our iTunes rating. So in case you're wondering, these calls, listeners, a Bauble for Phil Knight's sweetheart. There you go. Keep that one in mind. Let's go on to our last one, then we'll keep on rolling here. This is Dropbox, ticker symbol DBX, trading today, 1998, off a buck or nearly 5%. Not a good day here for the box. Looks like a year ago they were trading 26 and a third, and they kind of sold off pretty hard to about where they are right now, about 19 and a half or so on Christmas Eve. And then actually the 52-week low became recent. Then they rallied again to 26 in February. Then they were kind of bouncing around. They hung up at that level, or got back to level, I should say, in July. Then sold off hard from about 26 down to 17 and a quarter, which is right around a 52-week low. Then they've since kind of bounced off that back up to, actually this ticked up to 20 even right now as we're speaking here. So let's see what they got going on here. They have the NOV 16 puts. So NOV 16 puts looks like a little bit of a line in the sand print here. Your old favorite trade, Mr. Rock Lobster. 5,000 of them going up for 21 cents right off the bid. Earnings are the 7th after the bell here. So they have earnings coming up, but not actually in this cycle. Yes, that includes these. So Mr. Rock Lobster, a little bit of earnings line in the sand puts. It looks like here, drawing a line 16 and no farther for Dropbox. Is this another bauble, sir? Are these more baubles being bought?
It could be. You look at these line in the sand puts, and you just look at a 6-month chart, and you go, okay, where does somebody think the stock's not going? And you just point your finger there, and that's where it is. So the low for Dropbox is, 17 and change or something like that. So they're selling 16 puts. They figure it's free money, or they're going to take themselves some Dropbox. Like, in this company always astounds me just because I feel like Microsoft, Amazon, or kind of in their grill, the sharing workspace or, all that stuff. And there's slag. There's so many competitors in this area. But they still find a way to grind out a couple of bucks. Maybe I guess Microsoft has their cloud, so this would be a redundant thing for them. But another company that wants to build an office suite, maybe Google, who knows, or maybe people just like it because Amazon doesn't own Dropbox. So again, line of sand put probably is okay, just depending on how if the earnings kind of sort of hang out. But for the most part, it looks like at least a decent shot. But I would not expect those puts to decay very much because you have earnings till the 7th. So you sell them now, but they're not going to decay a whole lot. So the listeners can look. Like they're 21 cents now. They'll probably be worth 15 cents on the 7th, which is more than a month away. So you have to take the risk for X number of days for not a lot of decay when you have earnings. So for people that like to sell that kind of premium, there's usually better ways to do it. But they'll probably make money on this trade. Again, that is just pure speculation on my part, but I guess they'd probably make their 21 cents.
Pure speculation on all of our parts. That's what the whole show is, pure speculation. But we informed speculation. And you're right. That's the challenge of selling these earnings trades. It's earnings premium, right? Is that you don't get that decay, that juicy decay everyone wants until effectively right around the event happens, and it all comes crashing out at once. That's a rough way to make a living. This guy apparently liking it. And hopefully you're liking the strategy block because it's up next.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, it's Monday. It's time for a little bit of strategery. We got the Song of Ice and Fire to help us do just that. Sir, people have kind of assignment and kind of risk on the brain these days. It usually happens around SPY dividend time, which we are right around that time of year. So that's when people usually wake up to, wait a minute, what's going on with these calls, and why do I have these naked underlying positions in my account? So maybe walk us through some of the issues that go on with that assignment risk, particularly if you're, shall we say, maybe leaning a little bit to the over-levered side.
Yeah, this actually came across my desk first thing when I walked into the office this morning. So I walked in, and SPY closed at 298.28 on Friday. And I guess a trader sold the put spread, a 298, 297 put spread. The trader allowed it to play out to the end of the day, even with it being close. Well, what happened is that even though it was out of the money, the other side decided to exercise it because after hours, SPY continued to fall down. It just continued to fall. So what ended up happening is they ended up getting assigned, and their position was a lot more than they expected this morning, which they were expecting no position this morning. So it really brings me to 2 points I wanted to make with this when discussing on the strategy block, which is, look, if you ever sell American-style options, you can be assigned for any reason at any time, whether it's in the money or not. And in this example, it wasn't even in the money, and they got assigned. So keep that in the back of your mind. I always flash back, I believe it was Uncle Mike who was talking about, evaluate the risk-reward that's left in that trade, and look, if it's not worth whatever value is left in it, at least consider closing it out. That's something to be worthwhile to consider when going through that. You get too greedy, a lot of times the market's going to make you pay for that. So you want to keep that in the back of the mind, which also gets to the other side of that, which is over-leveraging your account. Always be aware of how much exposure you have. If your exposure is way too much for your account to handle, then you might not want to be able to hold that through expiration because this is a real risk that's out there. Now, the situation worked out, strangely enough. Unfortunately, it never works out this way for me when I have these type of trades on. But this worked out in their favor where, the S&P ended up popping up today. But when you wake up Monday morning, any kind of news can come over that weekend, and this can do just the opposite. And it can tank, and that can overly impact your financial situation. So the moral of the story, look, even if you're out of the money, you can still be assigned with American-style options, and just be very careful with leverage. You want to make sure that you're aware of your overall exposure, and you don't have to be greedy with these situations. There's nothing wrong with closing out and walking away with any little profit that you can take.
Yep, live to fight another day. We said it many times here on this program and on this network. To definitely, there's no reason to carry it, especially if you're that close. There is absolutely no reason. Uncle Mike, I'm sure this really grinds your gears. If this is one of your clients, I'm sure you would have definitely counseled them to take it off or done it for them if they weren't around to do it. This is, I'm sure, not in your wheelhouse, sir.
Yeah, it doesn't make any sense in my opinion. I mean, yes, you do look into getting the cheap penny here or there, but you're going to get burned. I mean, it's not going to happen very often. I would say about once every 3 or 4 years, I'll have a long option on that I would just stay on just because it has no bid on it. And I'll kind of just put out some crazy limit order to get out of it at like $4 or something like that. And that's typically how I'll deal with it if it's like part of a spread. But with that, whenever I have a long option, which there's no risk on, I've gotten filled on those crazy orders twice, I think, in the last 10 years. So probably about maybe every 4 or 5 years, I should say, it actually happens. So keep that in mind. It's going to happen at some point. You might get away with it from time to time, trying to scalp those cheap pennies on expiration Friday, but ultimately in the end, you will pay, and it'll be much more painful than the minor joys that you have gotten leading up to it. So I would really recommend that. Also, and if you have a long option, if it's in the money by a penny or more, it's going to automatically exercise. So on expiration Friday, what I do is if I do have any of those long no bid options and I don't want to get assigned, if it's in the money by a penny and then all of a sudden the underlying goes down $8 over the weekend, I call my broker and give them instructions specifically to not exercise them even if they are in the money. And they typically laugh at me and say, "Oh, that's not going to get assigned. You don't have to worry." I'm like, "Okay, but I'm on record though, right?" And they'll say, "Yep, you're on record." So that's the other way to deal with it with long options, in my opinion.
Yes, the contrary instructions. Important if you want that as well. And it's important for us to keep on rolling to our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, where we tell you what we're keeping an eye on, at least till the next time we can gather here together for the Thursday show. Let's start with the Rock Lobster, sir. What's on your radar here as all kind of mildness is breaking loose on the street today, sir?
Yeah, that's the whole thing, mildness. We don't have any more Fed. We don't have any more ECB intervention. I feel like, we don't got this. We don't got. There's nothing. There's no more easy gas for the market, except for a trade deal, and that's all I can think of at this point. And I think we just kind of drift around here for a while, and just see how long the VIX can stay where it is. Because I believe it's at least trying to cover an event, but I don't see much coming out with the Fed till the end of the year, if that even. So I think for the first time in a while, we're in a bit of a no man's land. There's no easy way to bail anything out. So this is a good old fashioned where there's no tea leaves for anybody to read. So they're just going to keep the vol up. If you do see the VIX crash, I would say the low 13s or high 12s. I would guess that we're back on the kind of the daisy train of expecting a trade deal or good news or something like that. But that might help. That might be the signal, but I think we probably see VIX crash before the S&P 500 really breaks above 3,000.
There you go, listeners. Mr. Song of Ice and Fire, sir, what is on your radar for the rest of the week?
Yeah, it's going to be watching this S&P in that 3,000 level. It's really interesting how it just kind of seems to gravitate around this area. So I'm looking to see some kind of separation one direction or the other. I'm also going to be watching silver. That's really interesting that it popped up here today. I thought that was really interesting to see how it's going to react moving forward. And then, obviously later on this week we got, GDP coming out, durable goods, even, we got the jobless claims. So it'll be interesting to see how some of that macro data will come in there. So the impact that it's going to have, who knows? But also kind of that, some of that news about if the Fed repo is going to, it seems to be working itself out, but it's to see how that story kind of develops from here.
And bringing it home for us, Uncle Mike, sir, what is on your radar for the rest of the week?
Well, I think 3,000 in silver. What else is there to watch at this point? I mean, we don't have anything else in the macro world. Of course, you have to watch the Twitter account by a certain someone, but ultimately, those are the main things with which I'm taking a look at it right now. I'm curious to see if we do have any more news happening. It's been at least a couple days since we've heard the word China in the news, it feels like. So watching for that, and we'll see where it takes us.
It's been since Friday when they canceled that so pivotal Montana visit and just sent the market into a tizzy. Unfortunately, that music, listeners, that sends us into a tizzy because that means that we're done, at least for now. If you're saying to yourself, I need more. I need more options and derivatives, volatility, term structure analysis, all this good stuff. I need it injected into my veins. Well, then stay tuned. We got you covered. If you're listening live, we'll be back in about exactly an hour talking a lot of breaking stuff in the world of crypto derivatives. We're going to break it all down. That's my old buddy Bill and a few others coming up on the Crypto Rundown here at 2 p.m. Central. Stay tuned for that. New products. You guys have been on us for Bitcoin options for so long. We finally made it happen. We're going to get into that and a whole bunch more new futures. So you guys who like slinging derivatives on asset classes that actually have a little bit of all and have a little bit of action to them, stay tuned for that. In the meantime, of course, if you're listening live, we'll pump in some good stuff for you. Maybe our Advisors Option Show, they have a lot of breaking down of some good stuff going on there in the world of what asset managers and RIAs are looking at from a vol perspective. Also, you like that earnings vol. We got Matt there doing his full earnings season analysis and breakdown of what's been moving, shaking. It's been a crazy season, so he'll break it all down for you. All that coming up live. If you're listening after the fact, well, then just hit next on your podcast player, and you'll get to it. But before we go, let's go back around the horn. Let's go back the way we came. Let's start with Uncle Mike, sir. If folks are intrigued, they want to learn more, maybe they want you to help them through all this assignment and all this madness, where should they go? What should they do?
Either come to my office at 303 East Main in St. Charles or visit my website, stcharleswealth.com. We'd love to talk with anyone in the derivative world or outside the derivative world. And I believe that derivatives are a very big part of a financial plan, and there's not a lot of me out there. So if you go to my website, stcharleswealth.com.
That's true. We do a whole show aimed at people like Uncle Mike with the advisor's option, which we'll put in next. And there are not a lot of them. He's right. So it's a small but growing audience of hardcores, which we love. All right, speaking of hardcores, they don't get much harder core than the Rock Lops. Mr. Rock Lobster, sir, if folks want to get at you to maybe get some of that good, maybe they want a bauble of their own, where should they go? What should they do?
So if you want the ability to buy more baubles for your sweetie, head on over to my webinar Thursday night, 8 Eastern time. You can go to the website, optionpit.com, sign up. Understand how to use volatility and make them butterflies in a way, well, that'll help you buy baubles with butterflies. What the heck?
I think you got a new webinar title, sir. Buying them sweet, sweet baubles with flies. What do you think?
Lovely title.
Hey, they don't pay me the big bucks for nothing. And last but not least, his favorite beloved show is in the can. It's won all the awards. I don't know what he's going to do next. Let's find out. Mr. Song of Ice and Fire, if folks want to help you fill the empty void in your time, maybe with some calls, where should they go? What should they do?
Yeah, so you could always take a look at fidelity.com/options. Go over the services that we offer as well as the trading platforms that we have and also the analytical tools. We also do online classes to help cover you in various topics ranging from reading charts to option strategies and options and the approaches to them. So if you ever want to have a conversation one-on-one about discussing whether it's a trade or a strategy, always give us a call here at Fidelity at 877-907-4429 and ask to speak with the trading strategy desk, or you can even ask for me directly.
Yes, call up and ask for the Song of Ice and Fire. They will know exactly who you're referring to. It's not hard. There's only one of them. So call them up and kick the tires, light the fires over there. Fidelity.com/options is the place to begin your journey if you haven't done so already. And on behalf of the Song of Ice and Fire and the Rock Lobster, Uncle Mike, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for getting those questions in. We love to hear from you guys. And for listening live, if you are indeed doing so, we'll be back in 58 minutes. Stay tuned for all things crypto. Spoiler alert, there's a lot popping off out there. Even if you're not a crypto trader, there's a lot of new products on the horizon, a lot of good stuff coming in the near future that we've been on about for quite some time. So this should be a fun one. If you're listening after the fact, just hit next on your player, and we'll be there. And, of course, we'll be back throughout tomorrow. Actually, tomorrow sounds like Options Boot Camp making a fun appearance, so stay tuned for that. That'll be a fun one. Of course, we got OPR on Wednesday. We've got back the Mega Double Day on Thursday with Twifo and more of the option block. And, of course, wrapping it all up with vol views. Maybe we'll sprinkle some more in there in between some interviews. You never know, it's going to hit the feed. So stay tuned to that. And we'll see you back here in about an hour for the Crypto Rundown. And we do it all again on Thursday with the option block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.